So the question is, if I have a 30-year term life insurance policy and I'm still alive after 30 years, what happens? So the answer to that is term life insurance policies don't just automatically expire, most of them. What expires is your pricing. So usually you'll have your price set for those 30 years. And at the end of those 30 years, the set price goes away and now your pricing is different. It gets way more expensive after that 30-year term is done. So you have a few options. One, you can convert. Most term life insurance policy will allow you to switch it from a term to a permanent life insurance before those 30 years are done. So you can do that. And usually you can do that without having to do new underwriting, new medical underwriting. So let's say I was in perfect health and I got this term policy, and now I've got cancer, I've got a major medical condition. Most insurance companies will allow you to switch it to a permanent policy. A permanent policy will last the rest of your life. They'll allow you to switch it to a permanent policy without having to go through the underwriting because, hey, now I've got cancer. I may not be able to get new life insurance anymore. So that part's very important. The other thing is there's some term policies that returns your money back to you at the end of the term if you're still alive. Those tend to cost more. So you can always look at those kinds of things. They tend to cost a lot more than just getting a term policy. Term policies, think of it like your car insurance, right? It's there in case something happens. I could have a car insurance policy for 30 years, never have a car accident, and at the end of those 30 years, I don't ask the insurance company, hey, do you give me some of this money back? They don't. They provided me protection in case I had an accident. So term life insurance policy is very similar to that, providing you protection in case something happened. Sometimes the term life insurance policy, depending on the type you get, if you have some with living benefits, they can actually pay you while you're still alive if you got critically or chronically sick. So to recap, term life insurance policy, at the end of those 30 years, they don't technically expire. What expires is your pricing, so the price goes up astronomically. So you can just let it go and be like, hey, thanks for providing me coverage for the last 30 years. You can switch it to a permanent policy before those 30 years are up. Otherwise, if you wanted to, you can get a type of policy that's called return of premium. They tend to cost more, but they will return some or all of the money back to you at the end of the term. With the return of premium term life insurance policies though, one thing I would do the math on is figure out the higher cost it would be for that if you just put that money aside in a different account and you just kept it on your own versus putting it into the insurance company and then hoping to get that back at the end of the term. Why don't you just take that money and put it into a separate account and have that while you're building? That might be a better way to do it than paying extra to have a return of premium life insurance policy. So just a thought, always good to look at two sides of the coin, run the numbers and see what makes most sense for you.